Good afternoon, everybody on Zoom, and welcome to the first GK Capital Management and First Global Bank webinar. Let's talk money, investing during COVID-19. I'm Andrew Leroy, the Managing Director of GK Capital Management Limited, and I'll be the session moderator today. Thank you all for zooming in. You know, the nature of our business in financial services is one that is grounded firmly in relationships, and social distancing has really interrupted that sort of dynamic that we have with our clients, our customers, and that connection and face-to-face discussion that we want to have all the time has sort of been put aside. But I think the whole webinar approach could very well become the new normal. It's at least an option when we want to interact with you, the clients, and have our discussions. So what we decided to do today was have a discussion around the challenges that we're having in the financial markets as a result of COVID-19. But very importantly, look at the opportunities as well. And for businesses and investors, I invite you also to participate in the discussion. At Grace Kennedy, we have had a lot of meetings around COVID-19, both at the group level, but also at the subsidiary level. And you know, we want to ensure that we continue to be there for our clients, our customers, our shareholders, and our GK team during the challenging time. So what we've done today is we've assembled a panel to discuss and explore the opportunities, navigate the challenges to provide guidance around your next investment or business moves and how we proceed from here. So we have joining us today Mr. Stephen Whittingham, Chief Operating Officer of the Grace Kennedy Financial Group and the Director of GK Capital, Rand Strawn, our Vice President of Investor Relations, and from First Global Bank, Norman Thompson, who is on Zoom, Vice President, Corporate Banking Unit, and Dr. Vinette Notice, who is here with me in the room. Don't worry, we're actually separated quite a bit. Assistant Vice President, Adjudication, Credit Risk Management. Dennis Chung sends his apologies. He had something urgent company. He's not going to be able to make it. He says if he's finished in time, he will join. But he has also specifically asked me to say to everybody on Zoom that if you have any questions directly for him, send them to us and we'll get them to him and he'll respond. So to kick things off, I'm going to ask each panelist just to, give a 2-minute sort of presentation as to what they see as the challenges in the market and the opportunities as well. So I'll start with this room here. I'll start with Ryan, just to give some background to what he sees out there.
Good afternoon, everyone. I'm Ryan Strawn, Vice President, Investor Relations at GK Capital. Speaking briefly about the markets in terms of what has transpired over the last 2.5 to 3 months since the introduction or the advent of COVID-19, as it were. Primarily what we're seeing is the virus or the spread of it has been from east to west. So we would have seen where it would have broken out in Wuhan, China in Q4 2019. Thereafter, it's transitioned westward towards Europe, where it was the former epicenter, to New York now. And then persons are now saying, well, where would the new spot be since we've seen it peak perhaps in New York and it's trending, and the speculation is that we could see it break out in Africa, which really hope doesn't happen. Long story short, however, since about mid-February, locally and globally, we would have seen markets fall probably over about 25% on average from then to now, with the extent or the peak or the drop, so to speak, or the deepest fall being towards the end of March 2020, forgive me. So what is driving investor sentiment now is really 2 things. One, uncertainty, which is justified considering that persons are wondering when will their normal way of living return. Secondly, the other factor is what's going to happen with the virus, because right now, at one time, it was about containment, and now it's more about persons now speaking about coexisting. So you'd have heard up to today talk of economies wondering or pondering how to reopen and what the next step for them is. So more or less, that's where things are now. We would have seen the markets, as I said, fall to about 18,000 Dow Jones. Now it's about 24. The next question is, what happens next?
Thank you very much. Thank you very much, Ryan. Vinette?
For us, what we are seeing, well, even before we had an infection in Jamaica, we saw where our clients were affected with the impact on the supply chain coming out of China. And we saw where many Jamaicans they purchase from China, and with what was happening in China and their inability for stuff to come into Jamaica, we find that our customers were, their supply chain was impaired. So we saw that even before infection. And then as Jamaica got infected and the count started to grow and we started our social distancing mandate and working from home, and then we see where the BPO, the closure, the temporary, the 14-day closure of the BPO, which should be lifted hopefully by next week, we are hoping. But with that impact, we see where persons' income now are being affected. We see where the hotel workers, we see what happened to our hotel industry and our airline industry, and our persons who are also on the cruise ships. We see those income that would normally be remitted into Jamaica, into family members for debt servicing. We see where that is drying up. So we as a bank have decided to see how we can intervene and give support to our customers. So from the supply chain into our individual customers and businesses, not just the SMEs, of course, our large corporate clients, and also the employees of the SMEs, the owners of the SMEs, the workers in the corporate. We see the impact there as well. And so the bank has its role and responsibility in giving support to this pool of persons. And practically, as this COVID deepens, it really is going to touch everyone. And so as a bank, we just have to be prepared to be there to give support to our customers.
Thank you very much for that. Norman?
Thank you. In adding to what Vinny said, we have looked at how, as a bank, we can support a lot of our customers. And as such, we have put in place some support mechanism. We have looked at payment holidays. We have looked at how we can assist with working capital. And of course, we have waived some fees on credit cards and loans. The fact is, what we do notice is that quite a number of our customers and businesses that we treat with are experiencing some challenging times. We find that quite a number of our customers, those who will be able to, survive, are those who are able to give up and come up with creative ways of moving their products just about to anyone who needs it. So we see a lot of changes that are taking place in the space. We see a lot of more activities on the e-commerce channels. We see a lot of digital activities taking place. And it's really how we are seeing it. We're seeing those companies that are able to really come out on the positive side after COVID are those who are able to pivot and move ahead of this crisis. As it is always said, a crisis is quite a thing to waste. You can actually come up with really creative ways of innovating and delivering your products and services. And those companies and individuals who are able to embrace a lot of these changes, including the gig economy, we'll find that those are the individuals and businesses that will be able to survive on the other end of COVID.
Thank you very much, Norman. And Stephen, you have the last word.
Sure. Thank you, Andrew, and welcome to everyone on Zoom. I'll talk a little bit about the impact on business, but before I start, I think it's important to comment on the impact that this COVID-19 virus is having on people and personally and the families, because I think you can't underestimate the impact that this has on through the economy. So, it's a really unfortunate time and it's a sad situation, and companies like Grace Kennedy are really trying to do their best to try and help their team members, their employees, our customers through these types of circumstances. What I would say, though, is that on the business front, the impact on business has been really, really unique, right? Because the pandemic, which is global in nature, is impacting not just one particular part of the world, but really all parts of the world. So things like supply chains, which we never anticipated, would have been impacted in ways that they have been impacted now. Things like in circumstances where particular countries are having a hard time, aid comes from other countries. But now that we're facing a situation where the pandemic is global, that's kind of drying up. So this pandemic has really challenged people's and businesses' continuity plans because the broad scope of the issues that we're facing. So what has this resulted in? Well, there's sort of been a polarization of businesses that I never really conceptualized before. But that polarization is you have businesses that are impacted or that are driven by social interaction and businesses that are not so much or that are critical in nature. So for example, businesses that are driven by social interaction are the tourism industry, airlines, hotels, entertainment, restaurants, all of these types of businesses and all of the businesses that are linked to them, businesses that support these particular industries. Then you have other types of businesses that are faring fairly well, critical service industries such as supermarkets, food manufacturing and distribution, as well as other industries that were mentioned before, such as digital businesses that are really thriving in this environment full of social distancing. So in response to that, we've seen stimulus plans from governments to try and to negate the impact on the average business and on the average consumer because of the economic hardships that are coming from these closures of businesses. So, what does that mean for me? Well, in all of this at Grace Kennedy, we are seeing the benefits of having a diversified business. Our business has been in two lines of businesses. We have our food business on one hand and our financial services on another. And the diversity that comes from being a part of a conglomerate, diversity in the industries in which we're in, diversity in terms of the geographic nature of and dispersion of our business interests has really served us well. But I look forward to this discussion where we can talk a little bit more about specific issues and opportunities as well.
Thank you very much, Stephen. So just some housekeeping in terms of how we're going to approach the questions from our Zoom team, GKCAP FGB Zoom team. There's a raise hand little icon down in the bottom right of your screen. I believe it's the same for Mac or PC. If you want to ask a question, you can just raise your hand. We've actually received some questions beforehand. So if anybody wants to ask a question, please raise your hand and we'll try and answer that question. What I'm going to do, I'm going to go ahead and answer some of the questions or field some of the questions that we received before we came on. So the first one I have here is, what economic opportunities are currently available during this pandemic? I'll start with Ryan and then move to Norman and ask him to look at that.
Thank you, Andrew. So the question is, what are the economic opportunities that would have surfaced as a result of the pandemic?
Yes.
Well, it seems to me that the opportunity for the business that can take advantage of stationary customers at this time is most robust. So we would have seen a rise of logistic-driven companies. We would have seen where many institutions or entities have started to deliver their products to their clients at home. We've seen the rise or greater rise of e-commerce, online ordering that the truth be told, many persons have said Jamaica has lagged behind in that respect. So those two things jump out at me right now, separate and apart from what I consider the bare necessities such as food, technology, which at this time is a core necessity in light of working from home stipulations and remote work. And I think lastly, as I would have said in line with technology, telecoms, I think also the room or the opportunity within that space is robust. And we've seen Microsoft Teams, Zoom, and other means of multi-person dialogue. So those jump out at me as being the greatest opportunity at this time.
Thank you very much, Ryan. And Norman, your perspective?
Thank you, Andrew. This is going to be a new normal for quite a number of companies. We have seen a lot of changes. We have seen online classes, so schools are moving online. We have seen a lot of shopping online. Supermarkets are facilitating WhatsApp lists coming in and curbside pickup. This, I think, will carry even after COVID. So those companies, those businesses that are able to really find themselves in a position where they can move their products and from where they're normally having it to others, to the buyers easily, are those that are going to survive. You're looking at a farmer who might have surplus now and wanting to move that to buyers is how quickly and how innovatively he can, pivot and start looking at deliveries through probably a third party. You're going to see a lot of new businesses picking up. You're going to see a lot of delivery type companies probably in that space picking up. But this new normal is really going to facilitate those who are nimble, those who are able to pivot, as I mentioned earlier, and those who are really able to embrace the technology to really facilitate the movement of goods and services. Now, teaching, music, dancing, just about everything that can be done were normally being done in a setting, physical setting, can easily now move to online. So you're going to see a lot more businesses considering the online platforms a lot more. Now, let's not forget that there will be a lot of changes within organizations who are now realizing the benefits of working from home. And as such, some employees are able to effectively carry out their functions even while in their home. That will add to a lot of challenges that some companies have with dealing with work-life balance, etc. But they still have to focus on how they protect their data. But we're going to be seeing a lot of changes taking place, a lot of new business ideas coming up. Fintechs will be taking making a lot of moves in this time. It's just a new and opportunistic time for businesses, and we should really treat it as a positive, and really look forward as to how we will come out on the other end of COVID.
Andrew, I would want to add to that, in addition to what two panelists added, the opportunity for the medical supplies, ventilators, and we see where Jamaican team were getting innovative and creating their skill. Sanitization products. We see companies who were not manufacturing these products in Jamaica started to in response for the demand. And that habit of sanitizing hand is going to stay with us for a while.
A long time.
So
Agreed.
that would normally be an item probably at the bottom of your shopping list. It will now feature to the top. So you see these kind of products. Even now, even in this context, there were so many persons who started to make masks. Even before it was mandatory,
Yes.
and persons got creative, make masks, sell them, a lot of small groups, a lot of SMEs. I remember seeing someone being featured on the news where her products persons weren't moving them, and she immediately started to use her fabric in stock and made masks, and she didn't have hands to sell them because companies were buying them for their employees. So Jamaicans are entrepreneurial, and so you see where many Jamaicans are making use of some low-hanging fruit. Some of them will just before the COVID period, and Jamaicans are maximizing on those, but some of them will stay with us post-COVID.
Okay, thank you very much for that. I believe we have a question. Is that Mr. Sharp? You'd like to ask a question?
Two things. One, a comment. I'm getting a resonance when you speak.
Oh.
And sometimes it's interfering with the diction, so it's not coming through very clearly. I don't know if it's something in the room or on the sound system. Anyway, I wanted to ask, in light of all that the government are trying to do to cushion the blow, which is taking them outside of their original plan in the budget, as well as trying to maintain some of the budget, what is going to happen to things like T-bill rates and some of the government capital projects, like the roads, the Southern Highway to Portland, the highway to Williams Field, and those sort of large projects?
Thank you very much, Mr. Sharp. Are you hearing me a little better now?
No, you're still coming through
Still
with resonance.
with resonance? Not sure why that's happening. Okay, hopefully you'll be able to hear the other panelists. I mean, in terms of like T-bill rates, I'll just give my perspective on it. I think monetary policy the monetary policies they're going to have to put in place just to manage this short-term sort of crisis. You could see some movement in the rates. I know they don't want them to go up too much because I know the banks don't want their customers to be able to get through this crisis. So what you don't want to have is crippling the smaller companies that can't afford those high interest rates. So the monetary policy that the government is going to put in place will have to manage those rates. In terms of infrastructure, some of the things I imagine will put on hold, but I believe Stephen had mentioned earlier about funding. There's some external funding for some of those, so hopefully that won't impact too much, but given that it's a worldwide pandemic, it's likely to have at least a timing impact on some of the projects. I don't know if, Stephen, you wanted to talk about...
Thanks for the question. I'll take a crack as well. It's great to see you. Thank you for joining. I really appreciate you taking the time. From an interest rate perspective, certainly from a T-bill perspective, I think interest rates are going to have to go up. I mean, they have been at historical lows, and all of this is resulting in an increased risk premium in economies globally. So I wouldn't. I mean, monetary policy they have tried to lower interest rates, but to the extent that that we have to seek external funding, it's quite possible that interest rates might go up. What I would also say to you from the perspective of the capital expenditure, I think it's going to be a very interesting situation, and the reason is because on one hand you have the attempts to try and balance the budget. On the other hand, you have a situation where, depending on how long this COVID-19 issue continues to plague the global economy, we might see declines in tourism for longer than expected periods. We may see declines in other aspects of our business, of our economy, that are related to international expenditure. And as a result, the government might also be forced to support through the implementation of various capital projects to put people to work, because we have, depending on the agency you listen to, well north of 100,000 people who are employed to the tourism sector. You have a construction sector that was booming a lot with residential home construction. So, you would expect that some of those things would experience a decline in the short term, and the government may need to step in with some of these programs, capital expenditure programs, to support the economy going forward.
Thank you very much, Stephen. Anybody else? Norman, you want to weigh in on it? Your perspective?
No, I'm fine with what was mentioned before. I certainly believe that there will be some contraction, and I agree with the approach about the capital expenditure. We'll have to really look at it at the point of post-COVID, whether or not it's the ideal time to continue with the capital expenditure, or we want to postpone for a time. There will be some economic contractions. We definitely will see some amount of interest rates moving up. It's a time when we'll have to revisit and keep being responsive to what's happening around us. But what's important is that Jamaican as a country, the people, we're very resilient. And what I think is important for us is that the faster we can get back the economy coming at the pace that it would normally be. Yes, it would take some time for us to get back to where we were, say, January and the latter part of last year. But I believe strongly that the passion, the drive, the entrepreneurial spirit of Jamaican will come forward in full force, as we'll see our economy getting back to a place where we can really look at some amount of stableness and revisiting of some of these capital expenditure that we had planned initially.
Thank you very much, Norman. Just to give some perspective around Mr. Sharp's question, I know the T-bill rates are way down. I mean, right now we're at about 1%, 1.05 for the 6 month. And 5 years ago, we were in the region of about 6. It really has come down quite a bit. And to Stephen's perspective on whether they'll have to go up, there's still some room to go. At 105, you're almost earning zero. So, does that answer your question, Mr. Sharp? Sorry, you're on mute, Mr. Sharp.
My other concern is, while it's down there, it will encourage a lot of borrowing through the banking system. And will the economy be vibrant enough to maintain the level of borrowing? Or will the banks be able to cope with the demand for that borrowing.
Yes, I know that is a concern, and you're seeing some of the policies being implemented now to make sure that the banks remain in a position, stable in a position to meet their obligations. Vinette, you want to weigh in on that as well?
The truth is, it's only time that will tell, because the depositors will have to be confident to leave the funds with us to provide the liquidity for us to unlend.
Yes.
And again, it comes back at what price we'll be compensating them to retain those deposits with the bank, or with, whatever instrument they may determine, whether it is via GKCAP or with the bank, but whatever instrument, what incentive, how comfortable they'll be to retain those funds at that price for us to have it to unlend. And right now, in this COVID context, where we just don't know enough, this is just so new for us.
Yeah.
We're not going to sit and wait for time to determine. There are some decisive actions that we will have to do, not just as GK, but as a country, and as the economy, and as a competition, as financial institutions. There are just some decisions we will have to take to decide, both in the best interest of our depositors, our stakeholders, our investors, being also mindful that there's a bigger picture of our economy.
Okay. Thank you very much. Any other questions online? Any other hands raised? Conrad, you had a question?
Can you hear me?
Yes, hearing you, Conrad.
All
Thanks
right.
for joining.
One of the questions I was asking, just determining where this coronavirus, keeping economies around the world closed for such a long period of time. Obviously, I guess everybody has to weigh the pros and cons of it. I'm not sure where the government is going with this. I think they're doing a balancing act. But my question really is, how long can we stay like this, being basically closed off?
Yeah, that is the question everybody's asking, Conrad, and it's a tough one because you don't know. It's it's a worldwide thing, so everybody, anything anyone does impacts the other. We rely heavily on overseas markets to support our productive capacity as well, and so it is going to. The quicker they get back on track, the quicker we will here. But it's such a vicious cycle almost, as we've seen. I don't know if anybody else has any views on it.
That's a concern we too have as a
Yes.
bank, because we have taken a decision, and Norman said it earlier, that we are supporting our customers via payment holidays and principal moratorium. And let's make a distinction between payment holiday and principal moratorium. The payment holiday is the customer pays nothing, neither principal nor interest. Mm-hmm. And that interest that is due in April and for the next 3 months, that interest is pushed back into the back end of the loan, and the customer is still required to pay it. Mm-hmm. The principal moratorium is the customer continues to pay interest, but the principal component of the debt is also pushed back into the back end of the loan. The back end, if the loan is for 10 years and the customer has gone 4 years, the remaining 6 years after this moratorium period, it's pushed back into that back end. Now, while we are working with an initial 3 months and then another 3 months, that's 6 months, we don't know how deep COVID is going to run. Mm-hmm. And so after that 6 months, we may have to have a conversation with our customers, because we may decide to give 6 months possibly to a hotel. But as you said, if the tourists aren't coming back in, if the hotels can't open to a certain level of capacity, they may be open but not enjoying the 75 and 80% capacity, but they are at 40% that's the word, occupancy. Can they continue to cover their bills, their working capital requirement, and service their debt? And so we, as a bank, we can't sit here now and say 6 months will be enough, or 3 months will be enough. Yeah. And so that's a struggle we are having too.
Yeah. What we do know, Conrad, is that the relationship between banks and their customers now is more important than ever. And the support from the financial services businesses is going to be critical. Of course, we also need to protect our businesses as well and make sure we don't overextend ourselves in supporting. So as you said, a balancing act, so we both have to balance. Both FGB, GKCAP, and our customers have to work together to try and get out of this. Any other questions online? Okay, we have some other ones that came in. This is more of an equity question, so I'll defer to Ryan on this. It's a very direct one. What information does one look for when analyzing a company's financial health? And I guess also from the bank's perspective, from a credit perspective as well.
Well, when assessing a company's financial health, I think where I start is the nature of the business, because many times if one doesn't understand how the business earns, then it's really difficult to assess true health. For instance, one may look on a business with seasonal revenue and look on the months when they're not earning, if one isn't aware of what the business does, and says, oh well, the business is struggling, despite the fact that they may earn at 5 points to the year rather than 12. So what I would say firstly is to understand where and how the business generates revenue. But in a typical sense, you'd want to look at, again, we have to make some assumptions. So let's assume it's a manufacturing company. For argument's sake, we'd want to look at the efficiencies, meaning the extent to which it retains, or the amount of cents it retains on every dollar of revenue. You may want to consider the assets, may want to consider the debt, the extent to which it's able to manage its debt. But then at the same time, you may have persons saying, well, debt is bad, but that's not necessarily the case, because you may have businesses that are able to drive their revenue at a much faster rate than the percentage that they're paying back or servicing their debt at. So there's no one precise method. Of course, standard-wise, you want to look at revenue growth. You'd want to look at the capacity of the business to service its debt, but it's a very complex mechanism to assess a business, and I wouldn't want to just put it out there like it's just a simple straight line thing, but let's just say revenue growth and debt management or servicing ratios for the time being.
I'd like to add to that as well, to Ryan. That's spot on. I think in this time, we're also going to have to look at some other qualitative KPIs as well, key performance indicators, looking at things like company's reputation, brand strength, customer loyalty, the management team you have in place. It's not just about numbers now, you have to look at other elements as well to ensure that it's a full team and a full package. Balance sheet strength is there. You also have the people in place to actually pull the business out of difficult times and pivot against what they have now and move into other areas. Stephen, do you have a position on this as well?
Yeah, no, I think diversity is a big thing. So, how does a company earn? Is it based in one particular region, or does it have multiple geographic opportunities to earn? How does it have different income streams, or is it focused on one particular income stream? And Ryan did touch on it, but it's at points in time such as these that the balance sheet is the most important thing, right? Because, as everyone has said, the uncertainty around how long this will last really comes down to, how does a company's balance sheet look? How long can it weather a storm? And, there are some companies that may have been heavily leveraged, in which case their runway isn't as long as a company that has a strong balance sheet and has the capacity to continue to operate for extended periods of time. To Conrad's question earlier about, how long will this last? When I've looked at the businesses that I have under my portfolio, I have really run stress test scenarios out until the end of 2021. Not because I necessarily believe we'll be in this type of quarantine or lockdown situation in the markets that we operate in globally, necessarily until for such a long period of time. But, the concept of rebalancing or achieving a new norm may take a little bit of time. And when you see where we're coming from, where tourism is a big part of the global economy, not just Jamaica, but the global economy. And when you look at airline traffic in the United States down to 5% of what it was year over year, I don't believe you're going to jump from 5% back to 95% in a year. I think it will be staged and staggered over time. So you really have to be conservative in how you look at that. And if you're investing in a company, I think you should be looking at their balance sheet and trying to figure out, can this company weather the storm?
Thank you very much, Stephen. So another question we got, any other questions online? No? One of the questions we got is about, I keep hearing about panic. You know, what advice do you give investors who are starting to panic about their portfolio? Because we have seen some big drops. The market is down 26% year to date, and I believe today it actually probably got a bit of a hit following an announcement last week. You know, Ryan, what do you tell your customers who come in and say, look, sell, 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 or, you know, how do you comfort them?
Well, I don't have many customers saying sell, 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 but in a general sense, I think it's always important to, I encourage person to take a step back and to take a wide lens view. So for instance, someone would say, okay, the sky is falling and the economy is going to, based on what they're saying, the economy is going to come to a close or be curtailed by 35% or 40%. And I said to the person, okay, let's take a step back and look at what we know for sure. So we're on the cusp of May 2020. The tourism sector may have been closed around March 10th or 11th or thereabouts when we had the first set of cases in Jamaica. But in the typical sense or in the real sense, we've had 10 weeks pre-COVID in the local economic context, and then we would have had probably about 7 since. So in terms of Q1's metrics, more or less, one can reasonably expect Q1 to be fair, just based on the momentum that would have carried us forward. What we know now is that we're in the middle of Q2 or 1/3 into Q2, that most likely is going to be depressed. Nobody really knows what's going to happen Q3, Q4. So we said to investors, at the end of the day, we will be making a guess that nobody can answer. It could be prolonged, which probably may be the case, or it could be cut short. One thing that's for certain, however, nobody can say the economy is going to fall 30% in a year because we have not gone through even half the year yet. And on average right now, we're hearing numbers being down 3, 4, 5%. So say that to say that when investors come to us now, we say, okay, so let's work backwards from there, and we say, which companies are you holding and how are they likely to be impacted? If your portfolio is heavily skewed towards an industry that's been shut down, then there is ample reason for concern. If it's skewed towards companies that are more or less operating as is, then perhaps the need for concern is not as great as it would have been before. Of course, you'd want to watch, or we need to make some adjustments in light of that. But if you've been properly diversified, then we can make key decisions at key points. And I would also say, we know we're coming up to earnings season in the middle of May in Jamaica. When we look at the earnings season, the US recently, again, the numbers were showing that Q1 had the 2 bits, as I said before COVID, after COVID. And the numbers were not coming out as badly as many thought. Even Deutsche Bank put out a release last night saying that their numbers were better than expected. And if you know the history, they've been losing money all year. So when we go through those kind of dialogue and conversations, persons come away from it with a much more realistic look. And many times they may say, oh, well, my advisors may have skewed, not in Grace Kennedy, of course, may have said, well, I'm too skewed in one area, come help us balance it. So the client benefits and everyone wins. So that's what helps.
I guess it varies customer to customer as well, what their objectives are and their risk appetite is and so forth. Stephen, you want to weigh in on this?
Sure, Andrew. So I completely agree with Ryan. I think, at this point in time, there are 2 things that come to mind. 1, risk profile, and 2, return horizon. From a risk profile perspective, our clients really need to think about where they are in their stage of their career and their lives, and are they prepared to undergo a continued correction of the markets, because depending on where you are in life, you may or may not be in a position to do that. Depending on whether you're a fund manager and you have limits within your portfolios, you may or may not have the choice but to rebalance your portfolio. because of the changes we have seen so far. In Jamaica, a 26% decline year to date is a material amount of losses so far. In the US, you've seen funds have to rebalance their portfolios because of various limits, and certain sectors have gone out of balance. So that's one aspect. From a return horizon perspective, though, if you believe that you are invested in a company that has a solid long-term future, if you have gone through and done what Ryan said, look truly understand what the company does, what its line of business is, what are its lines of businesses, how is it going to be impacted by a world in which social distancing continues to exist? Is it going to benefit from such a situation? Is it going to be neutral, or is it going to be challenged? If the world changes, and we do have a glimpse of how the world is changing, how will that company fare in the future? And if you believe that there are opportunities when you take a look at that company and where it is priced today versus its outlook for the future, and you have an appropriate risk return horizon for your investments, then you may find yourself in an opportunity where you can actually create a lot of wealth for yourself at this point in time. So, I mean, I'm encouraging people to speak with their investment advisors at GK Capital, speak with the team at First Global Bank, and really get an understanding of what opportunities exist out there, and take a look at the market, because it's at times like these where investors really are able to create wealth for themselves.
Thank you very much, Stephen. Agreed. I have a question here that we received prior for, I guess this is for FGB. What protections are available when it comes to consumer credit cards during this time? Norman, Vinay?
Thanks, Andrew. We have seen a lot of online shopping taking place, and our credit cards are pretty secure. We encourage our customers to explore our virtual card option. One of the wonders of using a First Global credit card is that you have that virtual option where you can use a portion of your limit online to do just those shopping. It's a separate card number, and the details are separate. We also facilitate online or immediate alerts for transactions that are done on your credit cards. And that, I think, help a lot of our customers with kind of managing what activities. And it becomes a security feature. So if your card is used, you're made aware immediately with a text to your phone indicating that a purchase, and you can indicate whether or not it is approved or not. So those are two of the benefits of using your credit card and how we facilitate our customers online. Want to add anything, Vinay?
You have covered it, Norman. Those are the key things. And we would want to also add that for card holders, we have also given all our card holders a payment holiday for April.
Oh, really? Okay. Sorry.
Yes, really.
Really? Okay. Okay, another question for the bank. Consumers, and this is more advice for your customers, your retail customers, how should you prioritize payments, mortgages versus loans, and that sort of thing? How would you advise?
Norman, I'll start and you'll finish up. That's okay?
All right. That's okay.
You know, and that's the very reason why we're giving our customers payment holiday, because we do recognize that the customer priority isn't, there are all these bills from a personal perspective to decide which one is for first. And obviously survival is important. So food is important. Well, because of housing, you have to pay your mortgage or your rent. And so you find that loans, the car loan payment is there. Still need the car to move around, but the cash flow is not there. So hence the reason for the payment holidays that we are giving to our customers. But what we say to our customers too is to manage your cash flow, the unnecessary spending, and you now have to determine what is unnecessary in your own space. But we say to persons, items that you don't have to purchase now, hold a certain level of cash now, because we really don't know how deep COVID is going to run and for how long. And that's why we are saying we are starting with 3 months with our customers, but you have to talk to us and keep a conversation going so we can know if you need more than the 3 months, if you need more than the 6 months. And this is coming out to, this is really as a result of how COVID is going to go, how it's going to unflow, how the economy is affected, how our international partners are affected. So we say to our customers, speak with us, we outline what is happening, we'll support you with the payment holiday, with some timelines, and we will keep that conversation going. So you don't have to choose which bill to pay first.
Thank you, Vinay. Norman?
Thanks, Vinay. Yeah, I agree with customers talking to their bankers and managing their finances, their expenses. Particularly, what I want to remind our customers to do, though, is to ensure that they also pay attention to their credit. And we wouldn't want for persons to be messing up their credit reports and their credit rating at this time. So it's important that you have the conversations with your bank and don't just ignore payments that become due, but ensure that after COVID, you're able to have a pretty decent credit rating. Thank you.
Thank you, Norman. In fact, that you mentioned cash, Vinay, and the next question we had was more from a portfolio standpoint. Should investors be keeping cash at the moment? So Ryan, you can touch on that.
Sure. Thanks, Andrew. So generally, as a means of practice, we tend to encourage investors to not be resistant to the idea of having cash. So it's not necessarily an adage that's, it's uniformly advised, because many times persons may be holding cash in their checking account that they can deploy at any time. But in standard practice, on occasion, there may be opportunities, or there may be times where we would have exited an investment profitably for the client, and we say, well, let's just hold the cash until the right opportunity surfaces. So that's actually something that we had been doing from earlier in the year, and of course now that has presented entry opportunities for some investors that we are actively considering. So again, many of these things are relative and subjective, but in the general sense, it is advisable.
Thank you very much, Ryan. And I think, Stephen talked about the opportunity too. There are going to be some opportunities out there, particularly in the stock markets overseas and here. The overseas question has come in to Ryan, just asking, how do you get into the overseas market? But two, do you go into stocks directly, or do you try exchange-traded funds? What kind of support can we provide from GKCAP standpoint?
Okay, so it's two questions. How does one access the U.S. markets? And then the other is, do they buy into stock directly or through ETFs, right? Okay. So all being equal, one can access the U.S. stock market through us at GK Capital. We have a brokerage relationship that we use to execute client trades, buy and sell, hold cash. And we've had a reasonable, I would say, outcome for clients, most certainly since inception. In terms of buying stock directly, again, as had been raised previously, there's a matter of risk profile, return horizon, and what one deems best. So again, it's not as though I can just say, oh yes, generally speaking, buy the stock directly. But there may be persons who want direct exposure and are aware of the implications of that. And in that respect, it makes perfect sense to have direct exposure. There may be others who say, well, they would much rather indirect exposure, and an ETF may be to their liking, but for others, they may say, well, the fee structure is not to their liking, meaning within the ETF. So ultimately, it comes down to the client in question, which is why, as a standard practice in this case, we do sit with the client and aim to understand their risk profile before we do anything.
Thank you very much, Ryan. I mean, I know just from my perspective, looking at the U.S. market, it tends to seem a lot more volatile than ours. And it's also a little way away from us. Sorry, that's just a clearing of the throat. And you do have to be careful going in. So getting good advice on entering that market is going to be critical, because you can go in where you think is a low and still come out lower. And it's very important that you understand that market and your risk profile before you go in. We have some other questions coming in, but we only have about 5 minutes left before we close off. I don't know if I also want to do a wrap up with everybody before we close. Are there any other questions online that anybody wants to ask before we do the wrap up? I haven't seen any other hands raised. I think most everything came in prior or via email. Stephen, you want to start off the wrap up?
Sure. Well, I'll start off. Thank you, everyone, for joining. This has been a great conversation, and I hope that you guys have taken some insights from this discussion. First of all, the team at GK Capital and the team at First Global Bank were very much focused on our customers and ensuring that we help you navigate through this environment. And as both members of the Grace Kennedy Group, a big part of how we operate is we care, and it's a critical part of how we think about you as our customers and the plans and provisions that we put in place to support you. I'll just close by saying, look, there's a lot of uncertainty, but there is a lot of opportunity. The S&P in February, between February and March, we probably down as low as about 33%. And then between March and April, it's probably gone up about 27%. Now, percentages are tricky, so be careful how you look at it, but because your entry points are important. But at the end of the day, if you had reached out to Ryan Strawn and Kimberly Thwaites and the team at GK Capital, there's an opportunity for you to have seen a material increase in your stock portfolio had you bought when there were opportunities. And that's what I want to leave the team with. I want to say, please consider the teams at GK Capital and FGB to be your partners in life and in your business, and allow us to help guide you through these challenging times. And I'll just end by saying, please stay safe, take care of yourself and your family. Thank you.
Thank you very much, Stephen. Norman?
Thank you. First, I want to start off just saying thank you to everyone for this opportunity. I think it has also helped us to communicate to our customers some of the opportunities we have for them, and also an indication to them as how we can serve them a lot more. First Global Bank is prepared to have the conversations with businesses, with individuals, and we encourage our customers to give us the call, speak with your representative. We are here to assist you. Early in the time of COVID, we reached out to our customers right across the board, engaging them as to how best we can assist them, anticipating that there will be some challenges. We asked them how we can assist them and how they are faring through this difficult time. And we have used some of these conversations to build on what we have come up with to offer to our customers. We're here to serve our customers in keeping on the care mantra. We do care about how this is impacting you, and we want to encourage you to stay safe. But just remember that with every crisis, there are opportunities, and we look forward not only to be your bank during the good times, but even through times. We're here for you, and we look forward to not only serving you during these times, but also be ready when you are up after COVID. Thank you.
That's all. Vinay?
Thank you so much for this opportunity for us to talk, for us to see that we do care. We say to our FGB customers, to our partners, to our stakeholders, please take care of yourselves, take care of your families, follow the advice of our government and our medical professionals in what we are to do to keep ourselves and our families safe. We need you to be around for a very long time so that you can continue to operate your successful business. We want to hear from you if there are the opportunities that you see coming out of this COVID experience. We also want to encourage our customers to maintain very good records, keep your invoices, keep your receipts, document, maintain your management accounts, because you want to see how well you did in this period, how well you manage it, because you want to see the expenses that you should be managing. Stay close to your debtors, collect as much receivables that you can collect, keep very good records so that when this time passes, you can look back to see how well you did, where your gaps are and what we can do with and for you as a bank post-COVID. Keep well.
Thank you very much for that, Ryan. And I'll just close up after. Wrap up.
Well, we'll close by thanking everyone for tuning in. We also want to, well, I'd also like to encourage clients and all onlookers to be mindful of opportunities. Many times in these potentially tricky, challenging situations, there is the crisis discount that, I like to refer to, where otherwise unavailable assets, or let's just say opportunities in general, would have never surfaced. And it's a great time to reposition where applicable. But generally speaking, just to keep an open mindset, the truth is it's very easy to feel despondent, to feel down in this time, but to be reminded that better days are coming. We as an institution, a group of institutions, are here with you. As Stephen would have mentioned, Grace Kennedy, we do care, and it's a complete kind of caring. It's not just monetary, but generally speaking, we care about our clients and business partners' well-being. So wish everyone well, and thanks again.
Thank you very much, Ryan. I've heard a lot. I've been kind of just, fielding questions and passing them around. But I think first and foremost, it's critical that everybody take care of themselves. So thank you all for tuning in. I mentioned that this is the first. It is very likely to be a lot more after this going forward, because it will become the new normal for how we communicate with customers, at least for a while. It'd be good to eventually get back to that face-to-face and actually shaking hands and sitting down across the table from some of our customers. But I think we talked about opportunity a lot. We could use that word a lot during the discussion. And I really believe that there are going to be some opportunities out there for your customers and for businesses out there. What I encourage our customers to, especially on the bank side, come in and talk to your bankers. It's going to be important for you to get through this difficult time, both the bank and you, the customer. Come in and talk to them. Don't leave anything off the table. Come in, if you have a wild idea, come in and talk about it. It might be something new that you want to finance because there's a new opportunity, a new area you want to get into given what's happening. On the GK Capital side, Ryan mentioned repositioning and making sure that your portfolio remains strong. There are ways to weather the storm through this challenging time, and I think it's a really great time to come in and take advantage of some of the opportunities out there. But in the interim, everybody stay safe and stay home, even though we're not home. But stay away and keep the social distancing going. And thank you very much for tuning in. And please also feel free to send in questions to the email address that you got the invitation from, and we'll get back to you within a week with any question that you have. So thank you very much for joining, and have a good afternoon.